Hi guys and welcome back to Yashi, today with another housing market update. Again, a lot of negativity. People are still convinced that we're gonna go through a housing market crash. Why? I have no clue. Yes, interest rates, yes, this, insecurity, the bank crisis and this and that. But let's actually look at the data. What is happening? What can we see? What is the sentiment? And where is the general direction? I might add some more of my opinion on what I see, my personal experience as I just listed a house too. We're gonna hit record. We're gonna start with the US economy. Where is the US economy, specifically inflation? We've been fighting inflation for the past 12 months. It's been going crazy. The Federal Reserve has been increasing interest rates by a lot, more than anybody else. Many countries already started to halt their interest rate hikes. The Fed is still on the, let's say, attack position to keep on raising. But where are we expected to be in the future? Where is inflation? Inflation in the last month, in terms of full inflation, is actually down to 5%, the biggest jump we've seen in a while. However, core inflation, which is everything except for gasoline and food, which are more volatile, is actually ticking up. The Federal Reserve has been watching mostly the core inflation rather than full inflation because they think that core inflation is a better metric. There's another factor that nobody's mentioning is that rent have been going down by an okay amount in the past couple of months consistently, but because of the lagging indicator of the Fed, the way they, let's say, track this kind of data is much slower. It's a few months behind, so it's not really getting into the data that we're seeing, that we saw in the past two CPI reports. But generally speaking, if you look at full inflation, inflation is actually going down. Core is not, but full inflation is going down. And the metrics, some of them are wrong or a little bit lagging. So in my opinion, it is a good thing. We are seeing some changes. We're seeing some positivity. I go to the grocery store. I'm noticing a little bit. I'm very mathematical. I don't know about you. You let me know in the comment how you're feeling. Generally speaking, interest rates. Interest rates today are at 4.7 and 5%. The Federal Reserve is trying to fight inflation. We saw still a very good jobs report. The economy has still a lot of spenders. We have major banks saying that the US consumer is still strong, although I believe that it is not as strong as they're portraying it, but this is my opinion against JP Morgan, which has a little bit more data, but also could have some kind of ideas. Where is the market expected to go? Where is the interest rate expected to go on the next Federal Reserve meeting, which will be after May 2? Major date release for economical data. People are expecting interest rates to increase by another 0.25%, all the way to 5 to 5.25%. Only 10% of a chance, according to expectations, that interest rates will stay where they are, meaning the Federal Reserve will not raise them. In both cases, we mostly expect that we're gonna see a raise. The Federal Reserve, because of a low unemployment rate, which is going even lower, a still pretty good economy. And a sign that core inflation is not moving too strongly compared to full inflation, they still have the room potentially to increase interest rates. However, we saw many other states halting interest rate hikes. So we gotta see what the Federal Reserve will focus on and how it will affect the decision. But these are the expectations. Now onto the housing market. Where is the housing market today? Interest rates. What is the average interest rate on a mortgage? How much are you expected to pay on a mortgage in terms of interest rates? We're gonna go first on bank rate. The bank rate average 30-year fixed loan is 6.94%, so close to 7. We're taking back up. Until now, from a marketing perspective, until we're under 7%, we have a 6 in front as the first number, it still sounds more positive. I believe that if we get to over 7%, it will be a very negative, let's say, marketing number that will make a lot of buyers back off. This is my opinion, but seeing how marketing and sales works in this country, I believe it will have a big effect. However, if we look at top offers on bank rate, we see that some mortgages get all the way under 6% to 5.91%. I'm also looking at NerdWallet here, and the averages are at, this is IPR, we gotta look at APR, 6.4, which is lower than the 6.9 we saw earlier. But still, we're under the 7%. That's the main thing, we're under 7%. We have an upward trajectory because we had some, let's say, volatility right now. Banks are a little scared. We had the bank issues. It makes sense that banks are backing off and raising their margin a little bit more. With that said, let's look at the housing data. In my past update, I was saying how we're seeing lower and lower new listings, which will lead to a lower active supply in the future. And this was 1.5 months ago. In terms of prices, I said also that I was expected prices to still be steady right now, but since in this period home prices last year started going up at a much faster pace because people were trying to sell and buy as quick as possible before interest rates were going up, I thought the way I saw it is yes, home prices today will be pretty stable, but if compared to last year, they will be lower. The question is by how much. We're gonna start with new listings, median sale price. And if we look at median sale price, the median sale price, no, wrong data. Median sale price right here is lower than 2022, as I expected. In 2022, we had a spike in the sales numbers, a spike in prices because we still had low interest rates. They started to tick back up now. People were trying to sell off as quickly as possible and buy something new, and both buyers and sellers were taking advantage of this. So as I said, the trajectory is up. We still see an increase in prices compared to the past couple of months, but the pace is not strong enough to keep up with 2022 prices. What is a decrease? 3%. Is a 3% decrease in the market considered a real estate crisis? Considering that interest rates are twice as much, a 3% increase makes actually a little dent. It means that even with such bad interest rates that we have today, people are still interested in buying, which is keeping prices still pretty up. That's the way I see it. Where are we in terms of new listings? We saw that in the past, new listings were dropping. Less and less sellers were selling a house. Most sellers own a house at 3%. What is the point of selling a house at 3% interest rates and buying something at 7%? It's kind of a ripoff, I understand, and I would act the same. Let's look at new listings. New listings are ticking up, but much slower than the 2021 and 2022 levels, which could lead, if demand is still okay in terms of strength, to an active listing count, that could be lower than the past years. If we go to active listing counts, let's see if my thoughts are correct. They are, because as we were here in January, active listings now finally surpassed the 2021 levels. So now active listings are lower than 2021. They were already lower than pre-pandemic levels, but now they're also lower than 2021. And they're going straight towards 2022 levels. We might find ourselves, if the pace continues at this level in the next 2 months, at the lowest point of active listings in the history of the United States in the past 10 years. What does it mean? Low inventory, same demand could lead to higher prices, even with higher interest rates. If the pace continues, will it continue? We don't know. Generally speaking, right now we will see, from a seasonality perspective, more homes coming back on the market. This is a time when sellers want to sell, and normally we'll see an uptick in inventory. And again, if we go to the new listings, we can see an upwards trajectory. As the month gets warmer, we see an upward trajectory in new listings, but not at the same pace as we saw in the past 2 years, which is alarming if you're a home buyer. If you're a home seller, what should you think? If you're a home seller, this is looking okay to you. Yes, it is a scary moment. There's a lot of insecurity and volatility, but you know that demand is coming back to the market as stuff is stabilizing and as rents are very high. People want to get out of renting and actually start building some equity. You know that there's not a lot of supply depending on the areas. We know that some areas were hit more, some others were hit less. I invest in Central Virginia. In my market, which has 70,000 people, we have 165 houses for sale, which is not a lot. So in my case, if you're a seller, you're in okay position. Can you be a little bit aggressive? I wouldn't be too aggressive, but I think you're still in a pretty good position. In terms of my personal experience, I just listed a house. And here's what I learned. If you're a typical consumistic person, you're expected to sell the house very quickly because you're now used to the standard you saw in the past 2 years. Normally, historically speaking, it would take a few weeks to sell a house and put it under contract. I've been now for sale for 5 days. I did a couple of showings. It's going very well. There's a lot of interest. But I gotta say that compared to my last house, which I literally put under contract in one day, to me it was a little bit of a hit as a salesperson. And I gotta say, guys, what we experienced in the past 2 years is not a normal market. So what I'm happy to see is that the market is a little bit more stable, is a little bit more normal right now. It's still a little crazy because of low supply, but it is normalizing. Yes, prices are high, but we don't see the excessive demand that we saw a few months ago. More like a few years ago. Actually, a few months ago. Guys, so I hope this gave you a good idea of what is happening. Let me know what you think. In terms of what I said in the beginning, let me know if you are seeing inflation easing, if you're seeing prices improving. Let's not talk about gas prices because those are very volatile and doesn't depend a lot on us, but tell me about food prices, what you experience at the grocery store and other services. If you want me to add some other data points in these videos, let me know. I might add them in the next videos. Thank you for watching.